Hey everyone, Tony here again. Wanted to present a new stock, at least one that I haven't really paid attention to before. It's called Virgin Galactic. Currently, it is at new all-time highs. It is a relatively new stock. Let me see if I can go to the charts really quick here. Yeah, it looks like it's working. It's been listed, first listed September 1st, 2017. So pretty new stock, and it's hitting all-time highs. It's one of the big three when it comes to bringing people, or just innovation into outer space. Virgin Galactic being one of those, SpaceX being the other one with Elon Musk, and the third one being Blue Horizon with Jeff Bezos. So, and Virgin Galactic being backed by Richard Branson, which you can see here on that splash screen video on their website. Yeah, they're one of the three that are trying to do their thing there. So let me see if this page works. There we go. Majestic Richard Branson there. Purpose, why we go. Virgin Galactic recognizes that answers to many of the challenges we face, sustaining life on our beautiful planet, lie in making better use of space. Yeah, basically they want to go to space, take you there, and make money. So let's close their page. Let's look at some brief fundamentals. You're going to see that they have no earnings. It's blank. It's profit, price to sales. It's in the red. It's a startup. There's no cash per share. The book value is at $31. Which is neutral considering that we just had this massive, pretty much parabolic price movement. It's been at about the $10 range for a long time. Had a brief dip in December and then just launched. No pun intended there. And yeah, so when it comes to the fundamentals, there's really not much there. So I would be not bearish, just it's a startup. So as a growth company, I guess we have to see how everything kind of unfolds. So analysts, let me see here. They only have three. Excuse me. We have vertical research, which is interesting. It looks like they might focus on this kind of market. They're at a buy at 20, outperform from Credit Suisse to $12.43. So all of these were from last year, pretty much just before that this crazy uptrend. So news as usual here on Finviz. Can you guys see it? Yeah. And again, just a quick little note here saying Virgin Galactic is an aerospace company, develops human space flight for private individual and researchers. The company is based in Las Cruces, New Mexico. And there is no insider information, which is nothing too crazy. So starting on a monthly, again, there's not much data because we started in September 2017, but you can see that it's been pretty much flatlined since September 2017 up until September 2019. So 2 years basically flat. Then we had a quick wick up and then just nice crash. Not a crash, but just a retracement there that hit all-time lows at around $6.90. And then pretty much right after that, we've had this massive rally. So let's dive into the weekly to get a better idea of what's going on here. So yeah, it's kind of amazing that it was flat for that long. Let me see if it's no. Sometimes when I have a log chart, sometimes it kind of balances things out a little too much. But you can see that that wasn't the case. So you can see that we've had on the RSI here on the weekly, we're starting to get to overbought regions again. I've said it in all my other videos. Doesn't necessarily mean that it's going to just tank. It just means that it's extended right now, and we have to see if the stock really does, if it's as strong as it is, as it promises to be. Same thing with the stochastic. It's pins at the overbought, but I won't worry about that until it rolls over here the 80. Once it rolls over to the 80, then then I'll keep a closer eye. But so far, looking pretty bullish. Nothing really, I don't see any divergences, nothing on the weekly. So there's really not much that you can do here on the weekly except draw some extensions and see if we can get an idea. And this is not my favorite way of drawing the extensions, but we'll draw both to see how they differ. Let's see here. Close this little window. And then we show where'd it go? Here we have extensions. So I drew it backwards. So we can see that we are extended a little further. Let me see if I can draw my 4.618. Wow, it's actually past the 4.618. Excuse me. Let's draw. Let's see if by chance that gives us a better location. No, isn't too much. Oops. Let's do a 5, see if that got us there. It's not even the 4, right? Yeah. So we're at a 5 multiples from this extension there. Now let's try to draw it from where I would normally do it. So we had a brief, tiny little pullback here, and I would normally do this. Let's take this sucker. Actually, let's not take him out yet. Let's change that color. There. Okay. So yeah, this is it's pretty nuts. So let me do the one that I normally do. Let me switch the values to the left. Okay. So I'm going to zoom in and see if we could have gotten some nice little reaction here. So having this little run pullback, this is not, again, this, I don't know if to even consider as a pullback, but if we would consider the swing low to the swing high, we had the 1.618 hit. Most people would take profits. And then the cool thing is that the 2.618 was pretty much hit on the nose there. I think we had a 1984 hit, so just below. So if you would have done like a 5% less, which is usually what I recommend from these targets, you would have had a nice, you would have gotten profits hit there. Now here's where we have a more decent pullback, and I don't even think that got to a 382. That looks like maybe hit the 272. Let's see if that's right. So let's draw this. And add that 272, 236, sorry. Keep thinking about extensions. Yeah, so it was somewhere between the 236 and 382, which is a decent pullback. So this would be more valid from my perspective. So we had this candle here hit the 1.618, and then if we continue this rally, if it keeps going up, it looks like we may hit that 2.618, which would give us a profit target of $40.78. But this is so overextended, I wouldn't recommend anyone buy it. We don't have no divergence. We don't have anything. So far, everything is looking that it's that there's a pullback that should happen. Doesn't guarantee anything, but there's a pullback that should occur. And if we were to do that, considering this swing low from November to today's or this week's high of 38.72, we can see a pullback to 38.2, which would be the $26.56. That would make sense, but I think with such a quick parabolic move, I think that we're most likely to hit at least a 61.8, which it looks like the 20 MA here in yellow is crawling up. So by the time this rolls over on the weekly, we might have that 61.8 or maybe even lower, that 50 MA touching the 78.6. So that would give us a target of $19 all the way down to $13.70, give or take. But we don't have any divergences yet. Nothing on the weekly is kind of indicating that that's going to happen anytime soon. We would have to see. I guess my first indicator would be, will the stochastic roll over? So the K and rolling over the D and going below the 80, that would be my first sign, along with RSI also rolling over. Here I have it pretty high at 80. So if that rolls over, especially with the cross of that EMA that I have here. Is this an EMA? Well, it's a moving average. Whether it's a simple or exponential, it's just a moving average. That would be my first heads up on that. But again, they're both pretty bullish right now, so I'm not gonna go against it. So it looks like that may be a target, the $40.91, give or take, $40, $41 range. And then we might be able to test a pullback, maybe at the very least filling in this this gap here. Let's look at the daily now. So I'm going to delete some of these things because actually I'll leave that one. I'll just fade it a bit. And then I'm going to redraw this. And as you can see, this is such a new stock that even on the daily, we still have pretty much the same information here. We just, let's see, did I get that right? There we go now. So that ultimate had the 2.618, it's at $41.11. Not too far off. So if we take this swing low of the daily, swing low of January 27th to the peak of today, so all-time highs at 38.72 with a small pullback, $4 pullback, which not that small, but we'll see if this candle ends up turning into something a little more powerful for bears. But for now, swing low, swing high, and it looks like, yeah, it's testing that 38.2. And so here's where it gets a little more interesting on the daily. So we have a little overextended over here, had a small correction, again, overextended over here. But if this ultimately forms an all-time, I guess, yeah, an all-time high, and then gives us lower highs from this point forward, then it's going to confirm bearish divergence. So, so we have, let me take out the magnets. So we have higher highs in price here, but yet we have lower highs here. Now this is yet to confirm, but it's looking like that may happen if there's a close, and closes approximately in 2.5 hours. So unless we have some massive bull run, I believe that this may mark a high here on the RSI. So that would be your first sign of your first heads up of a retracement. Also, we've been pinned, which again doesn't necessarily mean it's going to roll over, but we've been pinned, overextended here, overbought on the stochastic for a very long time. Briefly broke below it, had that retracement in price here, but then quickly recovered. And once again, we are on that overbought section. So we would have to see a few things for me to be ultimately bullish here. First, the confirmation that the RSI is forming a lower high. Second of all, stochastic breaking below, crossing over and breaking below that 80. That would give me my second confirmation. This looks like it's going to be forming a bearish candle. We'll see how that goes. And yeah, that divergence is really one of the main things that I'm looking at here. Also, anything with a parabolic run like this is just, it's just inevitable. You're going to have a pullback at some point. Now, this 78.6 is close to what I would consider some horizontal confirmation there. We also have some here. This was just a crazy run, so I can see a pullback if it, you know, tanks pretty hard, going down to the 78.6, which is where that 20 EMA in yellow, and maybe by the time it does that, maybe the red 50 EMA will also be in line. So maybe the 20 EMA by that time will be the 61.8, and the red 50 EMA will be by the 78.6, which will give us a target of between $25, and so between $20 and $25 would give that little price target from my perspective. That's, of course, if we get confirmation of this bearish div, which I would really want to see not only today and tomorrow's, really by the end of the week, we should have a much clearer picture of what's going to happen here. And then, of course, stochastic rolling over or not. And then could we have higher highs? Yeah, but it's just so overextended right now that this should not be anywhere. If you're not in this position at the moment, again, this is not financial advice, but it's not what I would do. I would not be buying at these high prices because it's just very little reward compared to risk. Your reward is tiny in my point of view for a company that has, and let me go back here to show you, allegedly this only has 5 employees, no earnings. It's got income of negative 6.3 million, sales allegedly of 4.54 million. There's just not enough fundamental reason to back this. Well, at least by the numbers and the books. Now, yeah, if you go based on the news and the hype, then yes, there are more fundamental reasons, but personally not enough for me. So let me try to use this trend that I drew previously to kind of try to get some more confluence on what I'm trying to say here. So can we hit that 2.618? Let me try to draw a couple ABCDs and kind of show you where we may have some confluence. So we had this target here hit, which was that horizontal level of an ABCD from point A to point B, and then from that swing low to the swing high here, that target was met. So let's keep that one there. Actually, let's delete and recalibrate really quick. So let's go from there and see if we have another target hit. Sure enough, we got from this AB draw to the pullback. Now, a lot of people will say that this is not right, and I would kind of agree with them. I think the more proper way to draw this one would be to take this new high there and now draw it from this low here. So there was a target that was hit there. Now it was a slight pullback, so I don't know if to use that, but let me see if we could, well, a lot of people would do it from here, but then, it's kind of ridiculous. I would to probably there, but we really haven't had a proper pullback. Now, some people may do this low of this candle here. I wouldn't consider it too valid. We're already past that. So I just don't see an ABCD giving us. It already gave us that target between the 1.618 and the 200% level. So going by this one here, and let's go crazy and go by this high all the way to this ultimate bottom. So let's say you went ultimate AB and CD it. Once again, we hit almost perfectly that 1.618, which is technically the location to take your profit. So right now, in my opinion, we're overextended, well above that 200% level and pretty close to that 2.618. So I think there may be a push, one last, or maybe a small retracement, maybe to a 38.2, which we already had, but maybe a small retracement or a couple closes at that level, and then a push up to 2.618, which would bring us to that $41 level. But I just think it looks, from the looks of everything, it just appears to me that there's going to be it's due for a pullback. And that's basically it. And I was just trying to draw some other trend lines here to see if we can get some better ideas. So having drawn this one trend line, I would keep an eye on this and see how price reacts to this, because so far this has been pretty decent support, give or take. You can go from here, you can go from here. It's not too far off. So this is where my line would be personally, and I would keep an eye to see what happens there. So if we have a pullback, the most obvious pullback within a couple of days would be probably to the 61.8. If it breaks below that, then we can see, then I would start to get concerned, and then I would look for that horizontal at that $20 range to act as, and it's almost it is exactly $20. So between the $20 and $20.50 level as additional support. If it does break past that, then if I'm in a position, I would definitely not be holding on to it. And then the next level of support would be down here at the $15 level. In which case, at that point, I believe the 20 EMA up to 200. Sorry, the purple line is the 200 EMA might have crawled up there, and then you would have additional support there. And if it breaks past that, then it could get a little ugly there. So if you're in profit, don't get caught. So if we draw that same Fibonacci from that top to this low, we're looking between $19 down to $13. So a lot of that is making sense. And that's basically it. I just wanted to give my perspective on SPCE, Virgin Galactic, and I know a lot of people are talking about this, and they're a little bit on the FOMO side. So don't stress out, don't chase. Wait for a pullback if you're bullish, and then buy at appropriate levels. If not, then just stand back and watch it go. But in my honest opinion, I don't think anybody should be considering buying here. It's pretty high, especially if we get this confirmed RSI divergence. We have earnings coming up, so this might be a case of what is it called? Buy the rumor, sell the news. So this might be that. Buy the rumor, earnings come out. That would, if there's any kind of not so good news, I can see that just tanking. So it looks very much like that's going to happen. So the earnings looks like it's going to be the 25th of February, which is in about 2 weeks, give or take, or 1 week, a week from now. So yeah, that's basically my view on SPCE, Virgin Galactic. If you have any questions, please let me know. If you like the video, please like it and subscribe, and I'll see you on the next one. Thank you.